Hello guys, good evening. Today we will see what are the stocks that are at the buying range as on today. So the first stock that we'll be looking at it is that is Infosys. You can see currently the stock price is working at the range of 1700, near about 1700, and the RSI is working near about 56, and it came down till 50. It touched 50 and then it bounced back. So at the level of 50 RSI, it would work at the range of 1675. So you have to watch this, put this in the watch list, and if you are getting below 50 RSI level, you can think of accumulating one or two stocks in this stock. And the next stock is Alkylamine. So about this stock we discussed also in the last week. I told you to put it in the watch list, and as and when you are getting chance below RSI 50, I asked you to buy. I recommended you for this stock to buy one or two quantities. Right now you can see the RSI is working at the range of 47.13. The stock price is working at the range of 4070 rupees. So this is a good opportunity to accumulate this stock. So if you don't have this stock, if you don't have this stock, you can try to accumulate one or two stocks. And if you are having this stock, then also you can accumulate one or two stocks according to the investment amount that you have at the moment. This is a fundamentally very good stock, and it is very good stock to pick for long term. So next stock is in the pipe segment. So we are going to look at two stocks of the pipe segment. The first one is the market leader, that is the Astral Pipes. Right now you can see the price is working at the range of 2078, and the RSI is working at the range of 52.7. So right now it is just trading a little bit above the RSI 50. So as usual, you can put this in your watch list, and if you get chance to buy this stock below RSI 50, you can think of accumulating one two stocks. The next stock is the Prince Pipe. It is also in the pipe segment. So the first stock that we saw is a sector leader, and this is the competitor of that. So right now the Prince Pipe's market cap is working at the range of 7,000 crores, and the one which is with the Astral is very huge. It is working at the range of 40 or 30,000 crores. So there is a big difference. So you have to put the maximum amount in the Astral Pipe, and this is an emerging company, so you can put a limited quantity of you can buy limited quantity of stocks in this stock. So right now the RSI is working at the range of 54. So this is also a fundamentally good stock. So that is why I'm recommending this stock to you. So but do not put more quantity than the Astral. You should put most of the quantity in the Astral pipes, which is a sector leader. And if you want, you can put a minimum number of you can buy a minimum number of quantity in this stock. So you can put this in a watch list, and when you get chance to buy this below RSI 50, you can try to buy one or two stocks in this. So the last and the final stock that we'll be seeing today is SBI Cards. So right now SBI stock is also a very good stock, and it is a sector leader. Actually, it is a monopoly. You can say it is a monopoly. So right now there is no other competitors for this that is available in the market that is working in the card issuing, that is in the credit card segment. So this is the only company right now it is available. In the future there can be other competitors, but right now this is the only company it is in the market that anyone can invest. So also the past performance also suggests, and the performance for the last few years is also it's very good, and it is fundamentally also very good, and they have very less debt also. So right now this is also a good pick for long term. So this one we have not seen it in the past. So we will see the performance of this stock right now, and we will see the fundamentals of this stock. Right now the RSI is working at the range of 57, 58, you can say. So you can put this also in the watch list, and if you get chance to buy this one, you can try to buy one or two quantities in this one. So right now we will go and see the fundamentals of this stock. So now we are at the screener app, and we are seeing the SBI Cards and Payment Services. So what is about SBI Cards and Payment? It is engaged in the business of issuing credit cards to the customers in India. So the market cap, you can see it is more than 1 lakh crore, and the current price is 1081, and the stock P is 114, and ROC is 10 percentage, and ROA is 16 percentage. And the promoter holding, you can see the maximum of the share is with the promoter. that is near about 70 percentage. And sales too, you can see the median sales growth for the last 10 years. It is tremendous. It is 32.3 percentage. So the last 10 years, it has provided a median sales growth of 32 percentage. So this is a new stock actually that was in the market in the last year. So right from the start, as soon as this stock came into the market, there was pandemic. So you can see the drop of the stock price, and after that marginally it increased, and now it is working at the range of 1100. And you can see there is no prawns, and crons in the cons it is trading, and the stock is trading at 16.16 times its book value. And that's the only drawback right now this company is having. And the main reason for that, and the main reason of that is, you can see in the car segment, the peer comparison, in the peer comparison segment, it is working in sector finance and financial investment. But you can see all the competitors, it's not only purely car segment. So right now for the car segment, the credit card segments, this is the one and only company that is available in the market. So that is why the P is very huge, and that is why the stock is trading at 16.16 time of its book value. So there is no surprise that the valuation of this company is right now is very high, because it is a monopoly in this segment. So right now you will see the profit loss statement for last 5 years. So you can see I have it for last 7 years. So you can see the revenue on March 2014, it was 1400, and then 1800, and then 2300, and 3300, 5100, 7000, 9000, and in the March 2021 ending, it was 9300. So there was a bit, you have to see here, considering the pandemic, and there was no stores open, nothing was open, still it managed to give a slight bit of good, it was only a marginal sales growth, it is improved, but still it didn't post a negative sales. It still posted a positive sales growth. The same thing you can see in the net profit. So the net profit will be reflecting the sales growth. You can see the net profit 293, 267, 284, 373, 600, 865, 1245, and 985. So from around about 300, now it is increased to more than three times in the last 7 years. And you can see here the compounded sales growth for the last 5 years is 31%, and 3 years is 21%, and last 1 year is 1%. Let's ignore the last 1 year because of the pandemic. So they have a good balance sheet also. You can see the reserves starting from March 2014, and now it was negative. It was in negative minus 39 crores, and now it is having a reserves of 5350 crores. So reserves is decent. And as we saw in the beginning, they have a decent promoter holding. The maximum is with the promoters, and you can see FIIs from the last 1 year, from 4% to 12%, they have increased their stake. That which means which gives the investor confidence that the higher players, or the DAS and the DAS and the FIIs are pouring money into this, because they see that this stock can grow up in the future. So that is the reason. So this is the fundamentals of SBI Cards. It is a very good company, and it is a one stock that you can hold for long term. So I will add up to the list of our long term good stocks. So the one distinction I want to tell you, I hope you would also experience the same thing. So whenever you go to any mall or something, at least whatever I have experienced. So whenever you enter any shopping mall for any grocery or anything, so in most of the malls, there will be only one card segments that will be issuing the cards. Always I have seen this SBI card people. They will be standing. There will be two or three people standing there rendering or issuing the credit card. If you want a new credit card or not. I have seen the other credit card people also, but mostly in most of the in most of the malls and supermarkets, I have seen only the SBI cards. So you can see the same thing here. You can see the sales, how they are increasing the sales. You might see it funny, but that is one hidden fact behind this. So they are posting continuous revenue. That means they are selling their credit cards to the new customers, and more of credit card is being used by the people. So we, even if you compare us, in the past we were not having any credit cards. Even I was not using any credit cards, and as the day progresses, I am having 3 credit cards. So the more usage of the credit card will benefit these people, and in India it will only go up, and the sales will increase. If you see the other side, using credit card is not good for us, but on the other side, as an investor, if you think it is good for us, so it is better to take the stock rather than to take the credit card. So this is also a good one for long term. So I suggest you, if you don't have this stock, you can start think of buying when it is when the RSI is below 50. Okay, so that's all for today's video. I hope you liked it. Thank you. Goodbye. Good night.